October's here, and people are finally starting to realize something's changed in the market. But really, it's not scary. For those of us tracking it closely, that shift really started back in mid-June. Rates began dropping in late July and August, and right on cue, inventory started to decline again. Over the last 10 weeks, mortgage rates have held under 6.64%, and that consistency has triggered a ripple effect that's reshaping the market. I'm Keith Walker, your seasoned local real estate expert. Let's dive into the latest updates. So the story starts with limited supply. Roughly 70 to 80% of sellers are buyers, meaning they don't list unless they can find a replacement. That leaves just 20 to 30% of sellers who aren't purchasing another home. So when rates dip and first-time buyers, that same 20 to 30% chunk of demand, jump back in, they quickly absorb the limited inventory that's available. That's why tracking all this meticulously matters. It's not just about today's numbers, but understanding the flow of supply and demand week by week. For 36 straight weeks, purchase applications have been up year over year, signaling real momentum ahead. In fact, in 7 of the last 10 weeks, we've seen double-digit year-over-year growth in purchase applications. Simply put, the demand pressure is building, and that's showing up in pricing. Prices are moving again. For single-family homes, the average sales price jumped 7% from August to September and is now up 7% year over year, despite the roller coaster of mortgage rates, global tariffs, and political shifts. Condos and townhomes also saw a 3.4% gain month over month, showing continued confidence in a segment of first-time home buyers. So let's break down the actual numbers for October. Starting with single-family homes, inventory is sitting right around 1,113 homes, which is down about 3.2% month over month, but still up just over 2% year over year. Pending sales came in at 639, which is down less than 0.5% month over month and down about 9% year over year. Now, the absorption rate, also referred to as the heat index, which really tells us how fast homes are selling, is 57.4%. That's up about 1.5 points from last month, but down roughly 7% from a year ago, which means we're just below that 60% mark that typically defines a strong seller's market. Now, for condos and townhomes, inventory is at 790 units, down about 2.7% month over month, but up nearly 17% year over year. Pending sales are steady at 312, slightly down around 1.5% month over month, and down about 8% year over year. The absorption rate here is 39.5%, which is modestly up 0.5 point from last month, but down a bit over 10% year over year, still closer to the threshold that indicates more of a buyer's market than a seller market. Now, I do want to clarify here that those numbers vary differently between 3+ bedroom townhomes and condos and smaller options. Think affordability here, which is still a challenge. The buyers purchasing larger condos are usually making that decision to save money and have a more affordable purchase over a single-family home. Whereas 1 and 2 bedroom options are usually being purchased by the entry-level first-time home buyers whom are still struggling with higher interest rates and getting into the market comfortably. Now, mortgage rates have been trending lower since early September, now hovering in the mid 6% range as we mentioned before. Most forecasts suggest rates will stay in this range through the end of the year, with room to dip slightly if inflation cools and the Fed softens its stance. This combination, lower rates and tight inventory, is keeping the market steady and healthy, with well-presented homes moving fast and others sitting longer if they're overpriced. Now, the big picture. Here's what's really fascinating. All that crash talk, that we've heard the last few years hasn't materialized. Why? Because homeowners are sitting in an incredibly strong financial position. From 2018 to 22, we averaged 250 to 400,000 new listings nationally each week. But from 23 to 25, we've seen the lowest number of new listings in recorded history. Homeowners simply don't need or want to sell under pressure. And that's why this market, especially in Silicon Valley, is holding firm. So as we move deeper into fall, we're looking at a stable, slightly competitive landscape shaped by improved affordability, low inventory, and pent-up demand. For buyers, preparation and timing will be key. For sellers, presentation and pricing strategy remain everything. Again, I'm Keith Walker, here to educate and navigate, not speculate and fabricate. And if you find these updates insightful and helpful, please share with others, subscribe to my YouTube channel, and take a dive into all the relevant content for homeowners, buyers, sellers, and investors. I'll see you in next month's update.